Tesla is set with its revolutionary plans for the Tesla Giga Texas factory as it decides to split-shift workers from the Model Y line to the stunning Cybertruck production. Moreover, Tesla Cybertruck sightings have become increasingly frequent. Futuristic design of the Cybertruck seems almost too good to be true, leading some to question if it's all just a masterfully crafted CGI illusion. But that's not all. Elon Musk has issued a word of caution to the company's shareholders as the much-anticipated Q2 delivery report emerges. How will the Tesla Giga Texas Model Y line seamlessly transition split-shift workers to the Cybertruck production line? And what strategic reasons might Elon Musk have for advising caution to Tesla shareholders? Dive in this video to unravel the answers. Tesla's Gigafactory Texas, located near Austin, is set to undergo upgrades in the coming weeks, according to recent observations by dedicated drone operators and Tesla enthusiasts. The facility, which has been closely monitored since its inception, is preparing for a temporary pause in the Model Y production line at the start of July. These upgrades are expected to last approximately 5 days. Joe Techmeyer, one of the notable watchers of Gigafactory Texas, has been documenting the progress of the facility since its early stages. Drawing from various sources and his personal observations, Techmeyer reports that the temporary pause in Model Y production will allow for necessary improvements in the manufacturing process. The facility is reportedly transitioning from swing shifts to a simpler day and night shift system. Interestingly, workers previously assigned to the swing shift for the Model Y line will now be reassigned to the production lines of the highly anticipated Cybertruck. This reassignment suggests that Tesla aims to accelerate the testing, evaluation, and eventual production of the revolutionary all-electric pickup truck. Techmeyer estimates that this transition will likely occur between July and August. During the brief downtime in Model Y production, it is expected that employees will receive training to become familiar with the revised production systems, equipment, and layouts. While the initial impact may cause a temporary decline in Model Y production output, Techmeyer anticipates a subsequent ramp-up in production. Speculations are running high that the revised production lines will surpass the previous output of 5,000 units per week achieved by Gigafactory Texas. Although these observations and estimates provide valuable insights, it's important to note that they are yet to be officially confirmed by Tesla. However, if the predictions hold true, Tesla could potentially start Cybertruck production sometime in August or September, aligning with the expected handover event at the end of the third quarter. In addition to the Model Y and Cybertruck production lines, Techmeyer also mentioned a new Tesla manufacturing site situated about 20 miles southwest of Gigafactory Texas. This facility is expected to produce seats and possibly other sub-assemblies, supporting both Model Y and Cybertruck production. Production at this site is predicted to commence within the next few months, further highlighting Tesla's commitment to expanding its manufacturing capabilities in the region. Up next, frequent sightings of Tesla Cybertruck raise doubts as it continues to appear CGI-like. Sightings of the highly anticipated Tesla Cybertruck have been increasing in frequency, fueling speculation that the all-electric pickup truck is inching closer to production. However, despite the growing number of sightings, the Cybertruck still retains an otherworldly appearance, much like it did when it was first revealed in November 2019. Tesla CEO Elon Musk's past remarks about the Cybertruck being similar to CGI in real life have come to the fore. The unique outline of the Cybertruck, unlike anything else on the road today, adds to its unreal presence. With its sharp angles and unconventional design, it seems to resemble a prop from a science fiction movie cruising along ordinary streets. This distinctiveness places the Cybertruck right in the uncanny valley for cars where it appears familiar yet alien. Interestingly, this uncanny appearance may work to the Cybertruck's advantage. Quirky and unconventional vehicles often possess a certain cool factor that resonates with consumers seeking uniqueness and individuality. While the Cybertruck may not appeal to everyone's aesthetic preferences, its standout design is likely to attract a devoted and passionate consumer base. As sightings of the Cybertruck continue to increase, the public's intrigue and curiosity surrounding this electrifying pickup truck intensify. Tesla's preparation of its Gigafactory Texas staff further solidifies the notion that the Cybertruck's production is on the horizon. With its unreal yet captivating presence, the Cybertruck is poised to make a significant impact on the automotive landscape and further propel the adoption of electric vehicles. Up next, Elon Musk advises caution for Tesla shareholders ahead of Q2 delivery report. Tesla is set to reveal its much-anticipated Q2 2023 vehicle delivery and production report this weekend. The expectations surrounding the electric vehicle giant's performance are running high, with Bloomberg's analyst consensus projecting deliveries of 448,000 vehicles for the second quarter. Sales estimates from key markets like China also indicate the potential for record-breaking numbers. Amidst the excitement and optimism, some of Tesla's bullish supporters have expressed their intent to increase their holdings. One such individual is Holmar's blog, a full self-driving beta tester, who announced plans to increase his stake in TSLA in the coming weeks and months. This caught the attention of none other than Tesla's CEO, Elon Musk, who offered a word of caution to shareholders. "Please advise people to be wary of margin loans," Musk tweeted. He went on to highlight Tesla's historically high stock volatility, which often seems to defy explanation, saying, "We are confident about long-term value creation, but cannot control the manic depressive nature of the stock market." Musk's cautious advice has sparked interest and speculation among Tesla enthusiasts, with some speculating that it could be an indication of lower than expected delivery results for Q2. However, it's essential to note that this is not the first time the CEO has addressed stock market volatility and advised shareholders to exercise caution. Given Tesla's previous instances of high volatility, it wouldn't be surprising to witness fluctuations in the stock price next week, even if the company meets most of the street's expectations. Tesla skeptics, who have been known to influence the narrative surrounding the company, might contribute to the uncertainty and potential volatility following the quarter's end. Analysts at RBC Capital Markets are already predicting lower than expected delivery results for Q2. Analyst estimates compiled by FactSet suggest Tesla might deliver around 445,000 vehicles, while Bloomberg's estimates are slightly higher at 448,000 vehicles. The company's own consensus, which includes inputs from 27 analysts, is at 446,823 vehicles for the second quarter. Elon Musk's prudent advice comes at a time when Tesla's stock is highly valued and subject to significant market swings. Such caution is especially relevant for investors who may be considering margin loans, a form of borrowing against existing investments like Tesla stock. While these loans can be attractive to some investors, they also carry inherent risks. If the value of the collateral declines substantially, investors with margin loans may find themselves in a precarious situation, needing to either inject additional funds or sell off the stock to meet loan obligations. With Tesla's stock known for its unpredictability, such volatility adds an extra layer of risk to margin loans. Elon Musk's advice is a timely reminder of the inherent uncertainties in the stock market, particularly when it comes to Tesla. Despite the company's strong belief in long-term value creation, it's vital for shareholders to approach their investment decisions with caution and a clear understanding of the potential risks involved. Up next, delays in Tesla China's Model Y deliveries cause longer wait times for customers. Tesla's Model Y, one of China's top-selling SUVs, is experiencing longer wait times for delivery, according to information from Tesla's website in China. The latest expected delivery dates for the available variants of the Model Y are now listed at 6 weeks, indicating a potential sign of strong demand from consumers in the country. This development comes as Tesla is working tirelessly to deliver as many vehicles as possible before the end of the quarter, particularly in China, the world's largest and most competitive electric vehicle market. The last update to the estimated wait times for the Model Y in China occurred back in January, when the entry-level RWD variant and the Model Y long range saw their wait times increase from 4 weeks to 5 weeks. This change followed aggressive price cuts by Tesla for the Model 3 and Model Y, resulting in a surge in demand for these vehicles. China has shown growing enthusiasm for Tesla's Model Y with impressive sales figures in recent months. In May alone, Tesla sold 42,508 units of the Model 3 and Model Y in China, while also exporting 35,187 vehicles from the country, according to data from the China Passenger Car Association. The Model Y's retail sales in China reached 31,054 units, marking a staggering year-over-year increase of 428.58%. From January to May, Tesla China sold a remarkable 152,461 units of the Model Y domestically, representing an 87.03% year-over-year growth and making it the best-selling SUV in China during that period. Anticipation is high for notable updates in Tesla China's operations, particularly with the upcoming launch of the Model 3's Project Highland update. Project Highland is expected to bring exterior, interior, and technological enhancements to the Model 3 while introducing a more cost-efficient production design. The recent change in Model Y's delivery wait times is the second such adjustment in the first half of the year, according to CNEV Post, which has been closely monitoring wait times and price changes for Tesla models in China since April 2022. It is worth noting that Tesla operates a factory in Shanghai where the Model 3 and Model Y are produced. The delivery dates for the two versions of the Model 3, the entry-level RWD and the dual-motor AWD Model 3 performance, remain unchanged at 4 weeks. As of now, there have been no changes in the price or core specification information for the Model 3 and Model Y. However, there were adjustments made to their pricing information in China during the first half of the year. Notably, on January 6th, Tesla significantly lowered the prices of the entire Model 3 and Model Y range in China. Up next, Tesla NACS coming to Blink. Charging product lineup. The company has joined the growing list of supporters for Tesla's North American charging standard. The company recently announced its plans to incorporate NACS and the combined charging system into its product lineup, further solidifying the industry's adoption of this charging standard. One of the key products that will feature Tesla NACS integration is Blink Charging's 240 kilowatts DC fast charger. This high-power charger will be compatible with Tesla NACS, showcasing Blink Charging's commitment to expanding charging options for Tesla vehicle owners. Moreover, the company aims to make all its products NACS compatible in the future, ensuring a seamless charging experience across their entire charger lineup. Brendan Jones, the president and chief executive officer of Blink Charging, expressed the company's dedication to innovation and adaptation in line with the industry's zero-emissions vehicle adoption. He stated, "Our goal is to lead, innovate, and adapt as the industry continues its aggressive path towards zero-emissions vehicle adoption. Blink supports all OEMs and will ensure we have NACS chargers to meet the needs of GM, Ford, Rivian, and Volvo customers." Blink Charging is wasting no time in implementing Tesla NACS compatibility. They plan to begin producing Tesla NACS DC fast chargers by October 2023. Furthermore, the company aims to extend Tesla NACS compatibility to its Level 2 chargers. The engineering team at Blink Charging has already demonstrated successful integration of Tesla NACS connectors with their L2 chargers. As a result, Blink Charging intends to release Tesla NACS and 1772 dual units by early 2024, with the Bowie, Maryland manufacturing facility leading the production of these new units. The adoption of Tesla NACS by prominent automakers such as Ford and General Motors has prompted many EV charging providers to follow suit and incorporate the North American charging standard into their products. In Texas, for example, EV providers are mandated to include Tesla NACS and CCS ports in their charging stalls. Washington State is also considering a similar mandate for Tesla NACS integration. With its commitment to NACS compatibility, Blink Charging is aligning itself with the industry trend of collaboration with Tesla. By enabling access to Tesla's superchargers network, Blink Charging and other companies are fostering cooperation and expanding charging options for EV drivers. Brendan Jones emphasized this collaborative approach, saying, "Blink supports all OEMs and will ensure we have NACS chargers to meet the needs of GM, Ford, Rivian, and Volvo customers." Recognizing the significance of Level 2 chargers, which currently account for approximately 90% of EV charging use in the United States, Blink Charging has made it a priority to integrate NACS connectors into their AC chargers. By doing so, they are catering to the majority of EV drivers who rely on Level 2 charging infrastructure. Blink Charging's engineering team's successful integration of Tesla NACS connectors with their charger lineup not only demonstrates their commitment, but also results in significant time-to-market savings. As a result, the company plans to release the new NACS and 1772 dual units from their Bowie, Maryland manufacturing facility in early 2024. By embracing Tesla's North American charging standard, Blink Charging is expanding charging options for Tesla and other EV owners, contributing to the growth and accessibility of electric vehicle infrastructure across the United States. Up next, EV charging firms oppose Tesla NACS Texas mandate, says report. Several electric vehicle charging companies in Texas have raised concerns in opposition to the Lone Star State's Tesla North American charging standard mandate. These companies claim that the mandate is premature and may hinder the successful deployment of federal funds aimed at expanding EV charging infrastructure. The mandate requires EV charging companies to provide Tesla NACS and CCS ports to customers. But some companies argue that more time is needed to standardize, test, and certify the safety and interoperability of Tesla connectors across the industry. In a letter addressed to the Texas Transportation Commission, a group comprising 5 EV charging companies and a Clean Energy Association requested additional time to re-engineer and test Tesla's NACS connectors. They emphasized that rushing the implementation of the mandate could jeopardize the build-out of EV charging stations, which are supported by federal funds. The group stated, time is needed to properly standardize, test, and certify the safety and interoperability of Tesla connectors across the industry. The group includes notable industry players such as ChargePoint Holdings, a prominent EV charging network, and ABB, a leading manufacturer of charging infrastructure. Interestingly, ChargePoint Holdings recently announced the availability of Tesla NACS connectors at its charging stations, demonstrating their willingness to comply with Texas's mandate. The company plans to add Tesla NACS connectors alongside J1772 and CCS solutions, thus meeting the requirements of the mandate. Luxury automaker Lucid Motors has also expressed reservations regarding the rapid adoption of Tesla NACS. Lucid CEO Peter Rawlinson stated that they would only utilize NACS once Tesla enables 1,000 volts DC charging at superchargers. This concern reflects the differing specifications and capabilities of Tesla NACS compared to the CCS standard, as NACS is smaller in size but offers higher power output. The push for Tesla NACS compatibility extends beyond Texas. Washington State has followed suit, requiring compatibility with the NACS connector. Moreover, other EV-related companies, including major automakers such as Ford, General Motors, and Rivian, have been adopting Tesla NACS connectors. This widespread adoption prompted the Society of Automotive Engineers to announce the standardization of the Tesla NACS connector, recognizing the benefits it brings in terms of certainty, expanded choice, reliability, convenience for manufacturers and suppliers, and increased access to charging for consumers. Frank Menchaca, president of Sustainable Mobility Solutions, an innovation arm of the SAE's parent company Fullsight, expressed the advantages of standardizing the NACS connector. He highlighted that this standardization would provide certainty, expanded choice, reliability, and convenience to manufacturers and suppliers, ultimately increasing access to charging for consumers. The opposition from Texas EV charging firms emphasizes the need for thorough standardization and testing processes to ensure safety and interoperability across the industry. Up next, SAE is standardizing NACS to make it less dependent on Tesla. SAE International has made a significant announcement that it will officially standardize the North American charging, a connector that aims to make electric vehicle charging infrastructure less dependent on Tesla's proprietary connector. This move comes after Tesla introduced NACS as its charging standard in North America back in November 2022. Now, major automakers including GM, Ford, Rivian, and Volvo have expressed their intention to adopt the NACS connector, giving it substantial momentum in the industry. The decision by SAE International to standardize the NACS connector is seen as a pivotal moment for the EV charging infrastructure. While Tesla's proprietary connector was initially met with some resistance from the association behind the combined charging system, which is currently the prevailing standard, SAE's involvement adds credibility and legitimacy to NACS. SAE International has emphasized its commitment to developing the NACS connector standard on an expedited timeframe. This effort is part of SAE's broader initiatives to strengthen the EV charging infrastructure in North America. Furthermore, SAE is actively collaborating with national labs to establish cyber-secure charging infrastructure through public key infrastructure. Additionally, SAE's involvement in the reliability design of the National Charge Consortium further demonstrates its dedication to advancing the charging network. The standardization of the NACS connector by SAE is expected to have a positive impact on the adoption of this charging standard by more automakers. With the support of major players in the industry, the NACS connector is likely to gain further momentum, facilitating the development of a comprehensive and interoperable charging network across North America. The move towards standardization is crucial for the EV market, as it promotes compatibility and accessibility for EV owners. A standardized charging infrastructure eliminates the need for multiple adapters or specific charging stations, providing a seamless and user-friendly experience for all EV users. As the NACS train gains further momentum, it is anticipated that more automakers will recognize the benefits of adopting this standard. Up next, Tesla delivers strong Q2 2023 vehicle numbers, confirms analyst agreement. As Tesla prepares to release its Q2 2023 vehicle delivery and production report, analysts and investors are eagerly anticipating the results. Based on estimates compiled by various sources, including FactSet and Bloomberg, the Street's outlook for Tesla's performance is optimistic. analysts expect Tesla to deliver approximately 445,000 to 448,000 vehicles in the second quarter, taking into account the company's ongoing ramp-up in production at Gigafactory Texas, Berlin, and Shanghai. The delivery consensus from sell-side analysts, as compiled by Tesla, suggests a total of 446,823 vehicles delivered during this period. This figure comprises 15,800 Model S and Model X vehicles and 430,123 Model 3 and Model Y vehicles. The high expectations for Tesla's Q2 2023 results are supported by factors such as increased demand resulting from strategic price adjustments in key markets like the United States and China. By adjusting prices, Tesla likely stimulated demand for its popular models, such as the Model Y and Model 3, which could have contributed to positive sales momentum. However, it is important for Tesla investors to be aware of potential volatility once the Q2 2023 delivery report is released. Tesla skeptics often inflate their estimates prior to the company's quarterly results, creating a higher likelihood of the EV maker missing their expectations. This behavior aims to create a narrative of disappointment surrounding Tesla's quarterly results and is often featured in media outlets. Despite potential skepticism, Tesla's ongoing expansion and the continued demand for its electric vehicles indicate a promising outlook for the company. That was all the Tesla and EV news for today. What are your thoughts on this split shift of workers from Model Y to Cybertruck production? Share your views in the comment section below, and if you want to see more interesting videos, don't forget to subscribe with all notifications enabled so you don't miss out on the latest news on Tesla.